go by Matt. For those that don't know, I help new day traders become successful and put them on the right track to success. And you're in the right spot if you're looking to learn how to trade or just want to increase your knowledge about the trading market. With that being said, let's get straight to it. All right, so last week, Friday, we closed higher, leaving this gap just above the previous high on the 4-hour chart. And then on Monday, Sunday, the market gapped up for the new week. This is last week. We gapped up, and then the market pushed higher right away on Monday, making all new highs. And then the following day, the market just pulled back, taking all that happened in the market from the previous day right back. So anybody that was in profit and had their stop placed right here, the market ran for that. The reason why the market actually did pull back to that level as well, if we go to the 5-minute chart, and we go to that new week open, just obviously the close on, it also includes the close on Friday. So this is where price closed on Friday. Just pay attention to this because this is why some of you might be confused as to why the price does what it does at certain times. It's never random. So this is where the market closed on Friday. We have that last candle, 455, and then on Sunday the market gapped up. So this is the close on Friday, and then on Monday, obviously, like I said, price shot higher and higher, making a new high, but it also opened up higher. So once the market does that, you can mark this up. This is what you call an opening range gap. So that's the price that the market opens up at 9:30. So if I zoom out on a higher time frame, you're going to see exactly what I mean. So this was Friday's close, like I said, and then the market opened up here. This is Monday. And then on Tuesday, the market opened up 9:30, half an hour. The market opened up at 9:30. Immediately at 9:30, what did it do? It shot down and it went to close in the gap, which would be between this line right here, where my cursor is, and right here. So it closed in that gap and it rejected the new week gap. So for me, I was looking at the 4-hour chart, and pretty much my entry strategy is I'm always looking to get in when the market takes out a 4-hour swing low, depending on the direction of the market. So obviously, if we look at the weekly, it's been going up. Clear as day has been going up. Let me zoom in. So weekly, we're on an uptrend, making new highs. Same thing with dailies making new high and the 4 hour as well. So the market is in sync with the higher time frames. The higher time frames are all in sync, going in the same direction. So once I seen it take out this 4 hour low, which is a swing point because we have a high and low on each side, and we have this wick in the middle, which is lower than the two wicks on the left and the right. So that is a swing point. The market came down, took that low out where people had their stops, placed their stops, took them out. Now, what I wanted to see was the market actually run this again, like run this low. That's why I have it marked off. I was hoping it ran this low, but it did not. It respected the new week, which is a key level as well. So that's why I respected it. And then we have this 4 hour down candle, also known as an order block. It's respecting all of that. So that's a high probability trade setup. It did not have to actually come back down here and hit this previous high. As most people learn how to trade support and resistance, it doesn't always go that way. It doesn't always have to do support and resistance as you've been taught. So the market respected this. Once it did this low right here, that rejected it once, twice, and then the third time, I looked for an entry right here. So I got in right here, and once again, the market took off, going higher, pushing higher, and it took out this high, which I failed to take partial profit, take something off, which is okay. I'm still in this trade currently. I have the extension level at 5906 and 5940. So if we take out the Fibonacci extension from the low to the high that it ran, you can see that the extensions negative 0.5 and negative 1 align with these lines that I've placed on the chart. So these are my targets for this week. So the market just closed at 5 o'clock. It is now 5:09 as recording this. So last week Friday, last week Thursday, between Thursday and Friday's close, between Thursday and Friday's close, the market actually gapped higher. So that's a new day gap, which is marked off with this blue line here that I have on the chart. And then pretty much on Friday, the market, it made a high on Thursday, and then on Friday it failed to go above that high on Thursday, which is expected because usually Thursdays seem to make the high of the week on US 500. I've noticed that a lot. And if it's not Thursday, then it'll be the Friday that makes the high of the week. Vice versa. So we have this gap here for the new day on between Thursday and Friday. So if you go to the daily chart, and if I zoom in, you'll actually see the gap that I'm talking about more clearly. So if you look right here, there's a space between this candle right here, between Thursday and Friday. So that's the gap that I'm talking about. So I knew right away on Monday, if the market is not going to shoot higher, it's 1,000% going to want to close in that gap, because obviously the market has to do some form of pullback to go higher. So always keep that in mind, that the market has phases where it will either consolidate, it will be in some type of expansion where the market is going higher, or it's going to pull back where the market just pulls back to a level of resistance or a previous low. So for today, and by the way, if you guys finding this information informative, please hit the subscribe button. I'm trying to grow this channel. It could be the #1 trading channel on YouTube. So please hit the subscribe button and hit the like button as well. So last week I had this, like I said, I like to always enter where there's a swing low. So I marked off the swing low. This was last week Wednesday swing low, and this is Thursday swing low, and we also have Friday swing low. So those are 3 swing lows from last week. And this morning the market took them all out. So people that had their stops here, expecting the market to go higher and higher and higher, the market just ran that out, took the liquidity, and pushed the market, pushed price higher, and it closed higher than it was during the day where it went low and then it pulled back. So, and we also have this down close candle, which with a gap, which is also, if you look at it really closely, you can see that it actually hit it to the T. So if you look up here at the high, which is the H, and you see it's 5823.7, and then you go to this one, we're going to look at the low now of this candle, and we have the exact same number, 5823.7. So it hit this candle's wick to the T, and then it pulled back. So that would have been like a perfect entry right there. And another reason you will want to enter a trade right there, if that's not a good enough reason, if we look at US in comparison to US 100 and NASDAQ, it actually didn't make the low. So this is that same low you will see on the US 500, the Thursday low, and also the Wednesday low, which on the US 500 it did run lower. So if we mark that off, this is what you would call divergence in the market, where the correlated markets should be moving in tandem with each other, but this one failed to go lower. But if we look at US 500, this one actually went lower. So this is that low right there and the low right here. So it actually went lower. So once you see that, you know that you got a strong possible trade set up right there. So for the upcoming days, all I'm expecting is higher prices. I think it's done enough damage, taking out stops right here, and right here. These are all swing points. If you look carefully, we have a higher wick on each side than the middle wick. And these are 3 days in a row. So I believe that the market is due to push higher now. Another reason is, if you go back and look at US 100, I marked it off here, you could actually see that we have, the market is just pretty clean right here, and it usually doesn't like things like this. Like, price doesn't usually stop like this or reverse like this without it running the high first. This is just too clean. It likes price to be a lot more jagged. Let me give you an example. So price likes to be like this, pretty much. More jagged prices. Doesn't like clean prices like that. Like we call it relative equal highs or relative equal lows. The market doesn't like that. Usually it likes to come back at some point and run that high or that low, and that's a telltale sign to know that you're in the right direction. If you have all these things in motion going for you, which is a pretty good trade setup if you ask me. And I truly do believe that it's gonna run higher. We'll see by the end of the week how it goes. I do still have this trade on, still going for me, and yeah, so I'll probably post it later this week just to give you guys an update. And yeah, so that is Market Making Mondays, episode 26. If you guys have any questions, please leave it down below in the comments. And please subscribe to the channel, hit the like button. Enjoy the rest of your day, evening, or night. Peace.